morning, good afternoon, good evening, from wherever you're watching us from. Welcome to IA Simplified. IA Simplified is a podcast series where we talk to very interesting people, industry leaders, about the impact of intelligent automation in the SME and the mid-market regions. So today, I'm going to be speaking with a very important guest. If you haven't really guessed my name, I'm Tolani Jayetikolo. I'm the founder of the RPA Jargon Buster. Going to be looking at mortgage lending and automation opportunities. And just to put things into perspective, I have a guest. I have Gabriel Skelton from OpenBots. So Gabriel is the director of banking and mortgage solutions at OpenBots. Really nice fella. So is a go-to person for everything, mortgage automation. I think that's the person I know. And he has a lot of articles, which I'm probably going to link up to this video, wherever this video is going to be showing. So you'll probably see a lot of his articles on mortgage tech, RPA, loan origination. So yeah, so I'm going to pull my guest up on the stage. Gabriel, thanks for coming.
Absolutely, Skalani. It's a pleasure to be here.
I really want you to introduce yourself. Tell us a little bit about yourself. Tell us something that's special about yourself.
Absolutely. So I'm definitely a tech and sports enthusiast. So I'm obsessed with the game of basketball. I mean, playing it, watching it, playing fantasy basketball. So that's one of my personal passions outside of the tech world. But I actually am originally from Boston, Mass. So I'm definitely a big Boston Celtics fan, a big Boston sports fan. But definitely, I identify very much with Boston. And I started in the finance space for a large custodial bank there. Then I moved on to the legal tech world, and now I've been in the automation world for a little while. So it's been a fun time.
Really, really excited to have you here. And I think why I really brought you to this podcast. This is our very, very first one. And I know how passionate you are about, mortgage tech, mortgage automation and what you do. So I want to really ask you, what really is mortgage lending? What does this really mean? And what does automation mean in that perspective? If you can put things into perspective for us.
Definitely. So in the simplest term, right, granting mortgage lending is basically granting a loan to an individual to purchase a real estate property, right? And the main institutions that do mortgage lending are banks, credit unions, and pure play mortgage lenders. So what's interesting is that traditionally banking lenders dominated the industry, right? So you're thinking of your Bank of Americas, your JP Morgans, and for the first time ever, just last year in 2021, they actually were not in the top 5 of originating lenders, whereas they were for decades. So that's been a large change, and they were actually replaced by Loan Depot and Freedom Mortgage. So things are really changing, and the lending space is really becoming dominated by pure play lenders, by firms that are very digital, like Quicken Loans, who originates almost 10% of all loans. So that's why I'm so passionate about it, is kind of seeing the changes, seeing how digital the operations are getting.
That's really, really interesting. And why is mortgage, automation really why is it gaining traction? In your opinion, why is that really gaining traction at this point?
So I think we saw the largest increase during the pandemic. So it was catapulted by the pandemic, but a few different reasons. I think, really competition, retaining employees, how consistent the loan process is. So, I mean, competition, think about it. If your competitors as a lender are all investing in technology and you're not, it's difficult to compete, right? I mean, Freddie Mac released a report where they kind of compared firms that haven't invested in technology and ones that had, and they found that the ones that had heavily invested had $2,200 less per loan in terms of costs for each loan originated, right? And every lenders had cycle times that were 5 days shorter. So it's tremendously making things much more efficient. And if you're not operating at that level of efficiency, you're going to get priced up, right? And then in terms of the rising costs of full-time employees, right? The Great Resignation. So getting quality employees and retaining quality employees is difficult. But when you utilize automation and intelligent document processing and bots, loan processors, underwriters, loan officers, they're actually happier in their roles. They're more productive. They stay at their own firms longer. So it's something that automation isn't here to take over jobs. Automation is here to support the existing individuals do their jobs better. And lastly, the inherent nature of originating a loan is pretty consistent, right? Things, of course, change a lot, but compared to other industries, there's a certain flow that happens. And because of the consistency of the loan process, there's a flurry of repetitive tasks that make it ripe for process automation.
That's really, really good. And would you think that I know you mentioned COVID there. Everyone knows that COVID has been, it's been unprecedented, and there's a lot of impact from COVID. Would you say that COVID was an agent in the positive direction? To push more and more of mortgage automation.
So I think you're right in that the pandemic was a catalyst, was an agent to basically make lenders do what was inevitable, right? In terms of adopting automation technology. Historically, banks have been the largest consumers of technologies like robotic process automation, intelligent document processing, even AI. So lenders tend to kind of hide in the back and then say, hey, after you all can show that it's legitimate, then we'll kind of hop in and purchase these technologies. And if you think about it, right, lenders had to basically digitize as much as possible. So think about the traditional walk-in home appraisal, right? During the pandemic, that was legally not allowed in a lot of areas in the United States. So even the appraisal process was almost 100% digital, and most of it already was. So that kind of pushed a lot of lenders to start seeing how can they utilize RPA bots to automatically order appraisals, right? Can they use bots to automatically populate fields like lot size and property address and things like that humans tend to have inaccuracies when they do it themselves and they do it manually. So we've actually set up bots as complex of handling things like fee exceptions, bots that can actually order an appraisal for one AMC, and if that AMC has a price above a specific threshold, we can actually have a bot order from a second AMC automatically. So bots can do a lot of complex things, and a lot of aspects of originating is pretty linear and standard.
That's interesting. So, and I know you've already answered some of the questions I had lined up for you, just around some of the automation hotspots. I know you mentioned appraisers, you've mentioned different things the bots can do. Can you give us like maybe two more examples? I think that would probably reinforce the idea of why automation is needed.
No, absolutely. So I mean, every lender is different, right? Every lender should start with a workflow that's high in volume, that's consistently done, right? But I'll highlight two areas. So one area that's very popular is disclosures. So utilizing bots that can populate and send out initial disclosures and even closing disclosures. It's very popular there. And the reason why is because lenders have a lot of rules. So in the case of initial disclosures, lenders have to actually send out loan estimates within 3 days, 3 business days of receiving a borrower's loan application. So bots can ensure that they remain 100% client because bots do exactly as they're told. They don't make mistakes, right? So that's been one application of it. Another one that I've seen that's very popular in the closing side is with pre-closing credit checks. So credit checks are done, through the loan process, but it's essentially, one of our lenders, they wanted to make sure that, their applicants didn't go ahead and purchase a Ferrari, or they basically their debt to income ratio didn't increase substantially since they were initially approved by underwriting. So right before a loan closes, we have a bot that can actually order a credit report, go into that credit report and check if there's been any new inquiries, any new trade lines. And as long as everything is good to go, then we just save the company a lot of money, because say that loan, right, of that applicant did purchase a Ferrari and their DTI, that's income ratio, increased dramatically. Now that lender, if they wanted to sell off that loan, to investors, they can't. They have to keep that loan on their balance sheet, which has serious financial implications.
That's really insightful. And I know you've also mentioned. I want you quote you on one of your words as well, because I know you've mentioned loan origination, loan processing, and I've seen a few articles you've written on loan origination, and there's one particular statement I think that caught me like like I really looked at it and I thought about it for a while, and that was you saying, the total cost to originate a loan is at its, it's at its highest at the moment, and you're talking about, couple thousands now, probably over 9,000 US dollars. Can you really tell us why is that the case? What does this really really mean?
I appreciate you reading my articles. I'm surprised you didn't fall asleep when you're reading them. But it's fascinating. ICE did a report that, like you said, it's costing over $9,000 to originate one loan, and it's due to a lot of things. But one of the main drivers of that I mentioned before is the cost of a full-time employee. It's much harder to get a quality underwriter, which is a very specialized position, and they do very important work. They decide on granting loans of hundreds of thousands of dollars to, aspiring homeowners. So because of that, it gets very difficult to process loans inexpensively because you have to pay people. People though are the ones processing that. So what you can do is you can implement automation to have your underwriters have bots that can support them. So think about what an underwriter does. They're deciding on loans, but what they also have to many times manually validate and verify information, right? So if an underwriter, they may look at a loan package and check, okay, does that income information in the 1003 application form match up with the income information in a W-2? So things as simple and mundane as that, underwriters are doing, and a lot of those manual pieces cause inaccuracies and cause a lot of underwriting conditions to be struck up. And for a lot of lenders, underwriting seems to be one of the largest bottlenecks in contributing to long loan cycle times. So even a simple automation that reduces your underwriting conditions that get struck up and moves the process along a lot faster can make a huge impact in loan cycle times. Your underwriters are happier. Your loan officers are selling more. They're happier. Your actual applicants are getting their loans faster and closing on their homes. So it's a ripple effect throughout the entire loan process to really invest in digital and process automation.
That's really because years ago I used to work in insurance. I used to work in a very big insurance firm, and there was a lot of underwriting process, and that's kind of it's coming all back to me. What all these kind of things mean. But in the insurance realm, you're talking about a lot of risk underwriting, a lot of risk.
Mhm.
It's really, I think it's a lot of people need to really understand how automation can kind of come in together and help alleviate some of these issues and some of these problems we're experiencing. There's another when it comes to loans. I think loans is it can be very broad, you know and I know I've seen that used in different contexts. There are different kind of loans, mortgages, it's a type of a loan. There's another one that got me curious as well, which was the veteran loans. I've never heard of it before. I think I heard of it in recent times, and for those that are watching, it's something that I think the U.S. government is really pushing for veterans and their spouse. It's all funded. I think, is it funded? I'm not really sure. But it's an interesting place. It's interesting for veterans. What are the kind of opportunities there for RPA and IDP?
Great question. So basically, the Department of Veterans Affairs, they fund the loan for VA loans. But personally, a close friend of mine, he's in the Marines, so it's very important to me. We talk about it all the time, and I personally have the most utmost respect for anyone who serves our country. It's a very brave and valid thing to do. So what VA loans do, they basically help veterans, service members, or if you have if you're a surviving spouse, for example, and you're eligible, you can also use a VA loan to become a homeowner. So basically, VA loans are different than the conventional loans or the FHA loans in that they have no down payment required. They also have less closing costs. There's no need for things like private mortgage insurance, also known as PMI. So it brings a lot of benefits to applicants who qualify, and in my opinion, rightfully so. So because VA loans have a lot more extra steps, and they have pretty strict requirements for properties they finance, it's a great use case for robotic process automation, especially lenders that have high volumes of processing VA loans because of those extra steps. And I mean, there's actually a lot of issues with it in that, for average loans, I believe it's 8% of loans get denied for the typical loan type, but for VA loans, it's 15% of loans get initially denied. And a lot of that is because there are issues with automated underwriting where they make mistakes and then you need a person to come in. So having bots, again, ensure that there's 100% data accuracy is definitely something that can deal with a lot of value for VA loans for lenders that have enough volumes.
That's interesting. I don't think I've I've never really thought about it in that way, in terms of, this kind of loans, and it kind of shows that, intelligent automation, RPA, is really ripe for the market, and it can really do a lot of good. If put it into into good use. I always say people like that, and I think I want to take you away from the opportunities within the mortgage lending. I want to take you away from, let's say, your comfort zone into a different area, which is the mortgage tech. We've talked about, mortgage, lending opportunities, automation, but let's talk about the mortgage tech, and I
Mhm.
think I think there was a post I saw today, from OpenBot, talking about, the ICE, acquisition of Black Knight. I want you to, I'm not too familiar with some of this people, or some of these vendors, and but I think it was really major in terms of the acquisitions they've had in recent times, and what this acquisition means,
Mhm.
because if you look at, they have, I think with this acquisition, they're probably going to have, the largest share of the mortgage industry. And they've also started incorporating, I think, to the best of my understanding, incorporation like RPA and some other technologies. But what does this really mean? What's the future of this acquisition? What does this really mean, for people like us? People that preach automation. What does this really mean?
Honestly, Talani, you don't give yourself enough credit. I think you do a lot of research and you're always well prepared. So I'm very excited about it. It's huge news in the mortgage tech industry. So basically, it's not official yet, but ICE they're a company that owns the New York Stock Exchange, number one. So you can see the kind of breadth and depth they have there, and they own the number one loan origination system in the mortgage tech industry called Encompass. So what just happened is that they just made a bid to buy Black Knight. So now Black Knight owns the largest loan servicing system in the mortgage tech industry. They call it MSP. So not only that, but Black Knight also owns a competing loan origination system to Encompass called Empower. So essentially, there's all this antitrust scrutiny where you know individuals are saying, "Hey, is this fair?" Because they're gonna really have a very strong foothold in origination and in servicing technology, and they're gonna take over all the clients that are in that. But there's two ways to look at it. Will there be pricing competition? That's one piece, but also ICE deserves a lot of credit in really pushing forward the digitization of the mortgage loan process. Like they made a huge impact there with the pandemic, with the amount of you know automation that's within their system already, things like that. So from my perspective, it's a very exciting news that this deal does go through, but all in all, it's inevitable, right? The mortgage loan process is getting more and more digital. End-to-end workflows are possible. So I'm excited to see what ends up happening with this.
That's really. I think I'm more excited than you are about, because I like to see things unfold. Being the kind of person I am, I just take a back seat. I have popcorn. I'm probably just like, okay, let's see what's going to happen. So I'm usually that kind of person, but I'm really excited to see how that unfolds. Then I think, in terms of, we've talked about so many things today, and it's fair enough. I probably just want to leave you. Like, for me, I'm probably going to have dinner at some point, but I really want to ask you before I let you go. What is your advice, for mid-size, mortgage lenders looking to invest in RPA and intelligent automation? And I want to really know. I think one thing to bear in mind is, what is OpenBot's doing, that can really help these mortgage lenders? Because I really want to see, I want to see more mortgage lenders, investing in RPA and intelligent automation. It's really paramount to do that. What do you think?
I 100% agree, Tolani, and that's a great question. And there's been a lot of adoption by mid-tier lenders of robotic process automation, intelligent automation, specifically with open bots. And I mean, the advice that I would give is it doesn't matter which tech partner you work with, but if you work with a tech partner, make sure that they know your industry, that they actually understand and can speak your language. That's one piece. It's going to really minimize the time it takes to implement technology and automation there because they understand it. And number two, you make sure that you're investing in a scalable solution from a pricing perspective. So you mentioned what does OpenBots do, and one thing I would say is be careful if you're a mid-tier lender, credit union, bank, building an automation program with a lot of your budget tied up in licensing costs, right? You want to get the biggest bang for your buck, and with a lot of license-heavy platforms, sometimes even almost 50% of your budget can be tied up in licensing costs. So it's something that can definitely derail your automation program if there's no funds to continue maintaining automations and building more automations. So that's what we do, right? I work for OpenBots. We're a zero license automation platform. And again, we have enterprise RPA plus functionality. So we're one of the only platforms with the level of functionality of the big three. So that's been, making a lot of headwinds in the industry in terms of having lenders being able to implement bots that they can actually pay for and pay for long term and make sure they can get the return on investment on of what they're doing.
That's interesting. It's interesting. I'm all for people adopting RPI, intelligent automation. I've been preaching this for 7 years, so I'm all for it at
Yeah.
this point. So I think the last question, it's not really a question, but I think I've really enjoyed this conversation we've had. I think it's been very insightful, and I want to ask, how do people follow you for more content? How do people reach out to you? In terms of loan origination, loan servicing, mortgage tech, all of these wonderful key terms you've opened up my eyes to today. How do people follow you, and how do they reach out to you?
It's been a pleasure speaking to you as well, Tolani. And so a couple different ways. Like you, I'm very active on LinkedIn. I tend to respond to all my messages eventually. I have a lot of videos, articles, posts, and actually at the end of the month, we're gonna have a virtual event on hyper automation within digital mortgage operations. So that'll be pretty exciting too for anyone that wants to learn. My email is gs@openbots.ai. And if you want to know even more about mortgage, you can go to our website at openbots.ai/mortgage. So you can see all of our mortgage automation solutions.
Brilliant. So I'm going to attach all of these links so people can actually just go directly to you. It's been a very it's been a pleasure speaking with you today. I'm really excited to have more of this series. I hopefully can speak we can speak more in the future. Just for every other person watching us, there's going to be a full transcription of the video. It's going to be available on our site www.rpajargonbuster.com. It is also going to be the transcription is going to be available on LinkedIn. So if you follow me, you would definitely see the transcription. And just to remind everyone, RPA Jargon Buster is I pretty much I tell people I pretty much own it. I've coined that name for as long as I can remember. And what we do is it's quite simple. We do three things. We do consulting, intelligent automation consulting, we do research, and we do advisory. So it doesn't really matter what tech, what you need, but we tend to be technology agnostic. We help select the right tools for the right job, and we work especially in the SME and mid market because that's our that's the area where we feel that we can push in. We can have a lot of impact. So it's very important. If you want to reach out to me, um, you can reach out to me through my LinkedIn. Talani Jaitikolo is my LinkedIn name. There is the RPA Jargon Buster company page, and there's our website as well. So up until next time, stay informed. I'll see you guys later.